Hello everyone, this is Corey Mitchell with TradeThatSwing.com. Happy New Year. This is your stock market outlook for the week of January 3rd. It is a stock market holiday. The stock market is closed in the US and Canada on January 2nd. Each week I go through the same process, looking at market health indicators, how indices are performing, recent watch list performance, trade performance, and sector performance. What that does is it gives me an overall sense of how the market is acting, and then that tells me whether I want to progress with the other stages of my strategy, which would be then looking for individual stocks, looking for specific patterns that I trade within those stocks, and then waiting for the actual trigger that tells me when to get in. So this is the first step in that overall process, and this pretty much sums it up. Heading into the week of January 3rd, market conditions are poor. I'm not going to be adding to any positions aggressively or taking any new trades until I see a bit of improvement in the indices. And we'll look at why the indices are poor in just a second, as well as what would shift them into buying mode, which could happen very quickly. So at the moment, I'm not buying, but come Tuesday, Wednesday, Thursday, or by the end of the week, maybe I will be. So I'll talk about what would have to happen for that to occur. Recent stock watch list. That's the second part of my overall strategy. We look at market conditions, then individual stocks. I have a couple watch lists that I'm always monitoring. So I create a watch list usually every week if market conditions are good. But due to the holidays and market conditions being poor, I haven't updated this since mid-December. So I'll be doing that, hopefully updating that fairly soon. This one I did just update best swing trading stocks. That's just strong stocks that have been performing well recently, and that one was updated recently. So let's look at what the indices are doing. And on this chart I have the US and Canadian indices. So here's the Canadian index. Then we have several from the US which just focus on a bit different segment of the market. And then just because it's been quite strong recently, I have the India ETF up here. And the main thing to note is that we've moved into a short-term downtrend recently. So the NASDAQ especially is pretty much back at its lows, which isn't good from a price action perspective. But the other indices, they broke below these recent lows. And so we're making short-term lower swing highs, lower swing lows. So that's downtrending behavior. So I'm not going to get super aggressive. The one good thing is that this pattern that occurred, you can see we have a move up, a drop, move up to a new high, a drop. These are rounded top patterns. I day trade these almost all the time, and whether it's a daily chart or a 1 minute chart, doesn't really matter. The entry point is the same, and we would be getting out around where we are right now. So basically, the bearishness of this drop has already taken place. And if we start moving up from here, that would be a good thing. It would also probably, if we start moving up from here, our health indicators, which we're going to talk about next, would probably also start to improve. So, because overall, you can still see we have been making upward progress. We stalled out here by cutting below these lows, but we're still above the prior lows. And if we kind of zoom out and take a bigger picture, we are still making overall progress to the upside, especially if we start moving up from here. But we would have to move up from here. The one really negative thing is that the NASDAQ is not in that same state. The Russell also, we cut below these lows, we cut below these lows. We're really dropping fairly hard, whereas the S&P and the NYSE, we took out some minor lows right near a short-term top, but we still have this much, quite a bit of overall upside progress since October. And the NASDAQ, we don't have that. Russell 2000, not quite as much, but we're still making a bit of upward progress. We're still above the lows. Canada, same thing. We've cut below these short-term pullback lows here. Still, a fairly substantial rally since October. So that's a good thing. We start moving up. We could argue that overall trend's still intact, and we just had a short-term topping pattern here, which has been fulfilled to the downside. So a couple things to think about there, but overall, right now I'm not buying because we are in short-term downtrends on all of these, so we would need to start pushing up and for health indicators to start improving before I'd start buying. So let's look at what the health indicators are doing right now. This is how many stocks are above their 50-day moving average. Stocks in the S&P, only 45% of them are above their 50-day moving average. Only 40% of all US stocks are above their 50-day moving average. That just tells us not a lot of stocks are in short-term uptrends right now. It's going to make it usually a little harder to make money. When everything's moving up, it's very easy to make money. So I prefer to trade in easy money environments and stay out when it's tough. This is how many, or the daily average movement of the S&P 500, just in percent. During major bull markets, this is going to be very small, kind of like these areas here. Just very small numbers. We move up maybe 1.2% or 0.2%. We maybe drop 0.2%. We don't have these big values typically. So we're still in a bearish phase here with these really big spiky numbers. We just don't really see this kind of volatility in uptrending markets. So this is still a thumbs down for the moment. This one also trending lower. It's pretty much just tracking the S&P 500 at the moment. We were moving up, and now we've started to shift down. So we're making lower swing lows, lower swing highs in the advanced decline line. That's just how many stocks are moving up versus how many are moving down. And then this one is upside volume versus total volume each day. And I really only care about if we have 90% upside volume or 10% upside volume. So either above 90 or below 10, because that shows extreme levels. And on December 29th, we did have a 91% upside day. I saw it was close to 90, so I manually calculated it, and it was, I believe, about 91%, which is an extreme reading, but it's also in pretty low, right around holiday season, not a lot of trading, although volume was typical. So that's a positive sign, so I did give this one a thumbs up for right now. But in the overall context of things, I'd say overall we're still in poor, but this is good. This could signal that, we had a lot of buying interest there, potentially a short-term bottom. And again, like I said before, if we start pushing up, that would give us a nice signal in terms of price action. And these would, within a day or two, could be above 50%, which is a good thing. And this could start turning up, which is a good thing. This one's already good. So within a few days, we could start to see some improvement, but that would require seeing stocks and the indices move up. Without that, I'm not buying. So that's just the write-up on all of those. And then in terms of sectors, it hasn't really changed much. Basic materials, industrials, and healthcare have been the top of the list. On the various time frames, we look at 1 week, 1 month, 3 month, and they're near the top of the list pretty much every week on these 3 time frames for a couple months at least. And then energy kind of pops its head up and then drops off, and energy definitely moving up the list recently, very strong this week, and kind of the middle of the pack you can see over the last month, but over the last 3 months, moving back into the top spot. So those are sectors where you could maybe put a little bit more focus, or it might give you a bit more confidence taking some trades as conditions start to improve. They're just starting to improve again if we start moving up. So focusing on these sectors might give you a little more confidence to pull the trigger. What I'm doing right now, so I'm not going to be buying anything at the moment until I start to see the indices push up. Even then, I'm probably not going to get very aggressive right off the bat. This market's moves up a little bit, then we get the drop, moves up a little bit, pretty choppy overall. So I'm not going to get too aggressive. But if I do start to see some price improvement, I will look at the watch list and maybe, pick one stock out of there I might add to the portfolio. I do have some current positions that are holding up well. I didn't talk about that in here. When I look at the S&P 500, I also like to look at how have recent watch lists been performing, how have recent stock trades that I've taken been performing. And the trades I've taken are doing quite well, but I haven't created a new watch list in a couple weeks, so I don't really have much to go off on that, but at least the trades I took are doing good. So that's one positive as well. There are things out there that are working. It's just there's a lot of stuff that isn't as well. I also like to day trade, so I'm always doing that. I'm looking for the swing trades, but I'm doing day trading every day, and you can see how I do that in the price action stock day trading course or the Euro USD course. Really helpful in years like this. Luckily, we don't have years like 2022 that often, but 2022 was a pretty rough year for stocks. Most of the time was spent in downtrending markets, which means you're either shorting if you choose to do that, or if you're a long-only swing trader, which I know a lot of you are, it was a lot of sitting on the sidelines, just kind of waiting for opportunities, and those opportunities lasted maybe a couple weeks to a month, and then we were back to waiting again. So luckily those years don't occur that often, but when they do, it's kind of nice to have another system you can do to generate some income. So again, Happy New Year, and until next time, happy trading.